Coinbase is moving deeper into tokenized credit with a stablecoin fund called CUSHY. The notable shift is that the product targets institutions and uses tokenized shares that may move as collateral across compliant venues. Coinbase Pushes Deeper is the hook because the confirmed event creates a specific pressure point. Coinbase partnered with Superstate, and CUSHY is expected to debut in the second quarter as the first external FundOS vehicle. The measurable anchor is Q2 debut, and the story turns on tokenized credit rather than broad hype. Instead of treating the headline as a market mood swing, this segment follows the mechanism that makes the change matter and the next signal that can prove whether the story is moving forward. The confirmed baseline is this. The fund aims to lend stablecoins and explore private credit opportunities, while Northern Trust handles administration through its hedge fund services division. That detail gives viewers the frame for the rest of the story. It shows what is already known, which actors or assets are involved, and why the event is not just a random market headline. For this story, Coinbase and CUSHY sit inside a process where FundOS Rail can change the readout. The baseline also defines the boundary. Q2 debut is usable evidence, while anything beyond FundOS Rail still needs follow-through. The important part is to keep the evidence tight before moving into what the change actually does. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is where Coinbase Pushes Deeper becomes useful. FundOS tokenizes fund shares across chains such as Solana and Ethereum, with base integration expected, turning ownership units into transferable on-chain instruments. In plain English, the event matters because it changes the way access, risk, settlement, liquidity, governance, or infrastructure works. In this case, the stress point is stablecoin yield, which is why Q2 debut is a signal rather than decoration. That is why the segment spends time on stablecoin yield before discussing impact. Without that mechanism, the event is easy to misread. The headline may grab attention, but the mechanism explains why traders, builders, users, or institutions have to care about the next step. The impact lands with a specific group, not with crypto as a whole. Large investors get a structured credit product tied to stablecoin liquidity instead of a simple spot token exposure or retail DeFi vault. That is the practical consequence. It may affect how users move funds, how institutions manage compliance, how traders price liquidity, how developers build, or how risk desks read the market. The affected side is tied to CUSHY and Coinbase, so the scope stays limited to what the supplied facts support. That narrower read is more useful than a sweeping market claim. The open question is just as important as the confirmed fact. What remains unclear is how broadly venues will accept the shares as collateral and how private credit risk will be disclosed. That means the story should not be read as a guaranteed outcome. The proof standard is simple. The next signal is the Q2 launch, venue support for tokenized shares, and whether base integration arrives as planned. Until that signal appears, the confirmed development and the unresolved part should stay separate. A stronger claim would need Coinbase or relevant market participants to show follow-through around FundOS Rail, not only reaction around CUSHY. That prevents a useful news signal from turning into speculation. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal for Coinbase Pushes Deeper is concrete. The next signal is the Q2 launch, venue support for tokenized shares, and whether base integration arrives as planned. If that signal appears, the story has new evidence. If it does not, the headline may remain smaller than the early reaction suggests. A clean follow-through would connect Q2 debut to visible action, usage, compliance, liquidity, or technical progress. For viewers, the usable close is not a direction call. It is a checklist tied to Q2 debut, tokenized credit, and the specific trigger above. The final readout is practical. Track the next verifiable step, not the loudest claim around the asset, rule, protocol, or market move.